welcome, and I want to welcome you all to the 41st episode of In Conversation with Convergence. As you know, being a regular listener, this is a monthly podcast where we feature our clients and some very special guests. We help you to get to know market leaders and some of the top issues facing the industry. I'm joined today by a great guest, Sanjiv Sawhney, and Sanjiv is the group CEO at Waystone. Sanjiv, welcome. I want to thank you for joining us today. How are you today?
Very fine, George. Thank you, first of all, for having me here on this podcast. It's a pleasure to be here and share the Waystone story with your viewers.
Yeah, so and we're actually happy you're here in the great state of New York today. So
that's right.
That's right. Thank you. Why don't we start by you telling our audience a little bit about how you ended up at Waystone, right? I'd like to hear just a little bit about, yourself, your pedigree, and some of the prior roles you had, and why you thought this made sense for you.
Sure, George. So look, starting off with one part of your question, a bit about myself. I joined Waystone 9 months ago as the group CEO. After having spent a little over 31 years in large global universal banks. 28 years of those were at Citi and 3 years at JP Morgan. All my working life, the 31 years, has been in some way or form in the custody of funds business. So working on providing solutions to asset managers, asset owners, banks for their asset servicing needs. So pretty much done that. In all different contexts. I mean, I started off working in operations and technology. I remember the days as being a fund accountant many years ago as well, right? That's where it all kind of started. I grew into country and regional leadership roles before then taking on a more strategic global business head and client organization role. So my last couple of roles, I guess, which were relevant to the Waystone, looking at me as a potential CEO, was running the custody and fund services business globally for Citi, which I did for almost 7 years, after which I was giving responsibilities for the entire client organization across the entire securities services division. So that's broadly me, right? I mean, geographically, I've whilst managed global teams. I've been based in India initially, where I started working, and then in Luxembourg, and now in London. Personally, happily married with 2 daughters. All of us live in London.
Yeah. And then, and I also, I think back to the days, when I was the chief revenue officer over at JP Morgan for about 10 years. We, fierce competitors with Citi, right? At that time, right? And,
well, there is a lot of back and forth between those 2 organizations,
right? Absolutely. And I also, as you know, have 2 daughters. So, tell me about joining Waystone, though. What was compelling to you? To join that firm? Because listen, we've watched Waystone. We knew them. We got to know Waystone through the relationship we had with Centaur, right? But it's been impressive to watch the global expansion, which I know we'll talk a little bit about. But what was the opportunity? What attracted you to Waystone?
Yeah, look, I mean, so very different, I guess, in some ways from what I had done previously, having worked for large organizations, large global banks. I think a few things were very, very compelling as this opportunity came my way. Firstly, it was leveraging everything I've done for the last 31 years, right? I mean, I've always been in this sector, and Waystone, whilst not really competing with the global custodian, is selling very parallel services or adjacent services to the same client base, right? So in fact, I'm already back in contact with a number of clients I'd worked with in my previous jobs, speaking to them for services which we as Waystone provide. So I think that was one reason. I was not going to something very, very new. Secondly, in my different roles in my previous organizations, I had the opportunity of, working with a number of companies which are now part of Waystone. And my experiences were only positive with those individual companies. The combination of that was an attraction, very much so. You touched upon our combined common days at JP Morgan as an example. We're in a small industry.
Yeah.
I do have a number of people in the Waystone team at very senior levels whom I had the opportunity of working with in the past and had good respect for them. So that was another attraction, right? But you touched upon it. I think the main compelling factor was just what I saw and felt the opportunity for Waystone was based on where it had reached in terms of an organization and I wanted to be part and have a role in leading it, to taking it to where it can go. And I'll be very honest with you. I mean, the last 9 months, having come in, met a number of the clients, met the team, got to know our business better. That excitement's even more than pre-joining. So those were broadly the reasons for
Yeah, no,
taking the
and listen, it's a great time to come in because believe it or not, there are probably about 640, I'll call them fund administrators in the world today. Yet many of them are kind of cookie cutter, and I think what's interesting about you guys and even some of your European competitors is people are reinventing, right, a bit, and they're bolting on interesting product. Advisors want to buy product from less vendors, less service providers, and want to really look at how much somebody like you kind of can bring to the party. So it's a very interesting time to kind of build and expand. Tell our listeners a bit about Waystone, though. I think it'd be helpful, Sanjiv, to talk about a little history about Waystone, and kind of the firm itself, and really so far the growth story over, say, the last 20, 25 years.
Yeah, I mean, let me start with the history lesson, right? Start at the start. I mean, I think because if you look at the journey we have had as an organization, it puts very much into perspective what we are today, but equally importantly, what we aspire to become as well, right? So look, the organization was founded in the year 2000, so 24 years ago, in the Cayman Islands, very much as a founder-owned, single product, single domicile business focused on fund governance for Cayman domiciled products.
Yep.
Right? I mean, that's really what it was. It stayed that pretty much for a big part of the next 17, 18 years. And whilst it did get into a few more markets, it was all aimed at growing that Cayman presence in terms of fund governance, directorship, etc. It was only in 2019 or so where there was a big set of inorganic activity aimed at leveraging the European cross-border domiciles, which were becoming extremely attractive to global managers, both on traditional and alternative side, on the back of regulatory/client demand, where the inorganic activities gave us presence into these markets, and at the back of the investment coming in from our last set of private equity investors. We've got two private equity owners who are very, very supportive. There have been a few more strategic and larger acquisitions, which have basically brought us to becoming a pretty compelling proposition for the asset servicing space in providing scale, globality, and capabilities in the fund governance plus administration and compliance space, right? So, I mean, it's become a much more expanded business proposition. I mean, to just share some statistics which, give the story, 2019, 2020, we were around 200 people. We're up to a little over 1,700 now.
Yeah, it's impressive. Yeah.
Yeah, it's a big growth. I mean, I think, we were operating in a handful of domiciles. We now operate across 27 domiciles. And as I just referred to, right, rather than being a single product, single business, we are now three large, fast-growing, interrelated businesses.
Yeah, so let's talk about that, right? As I mentioned, there's, it's a very competitive landscape, right? There, believe it or not, when we started, and I'm not calling you just a fund administrator, but to get the point I want to make is when we started Convergence 12 years ago, there were about 400 administrators. Now there's about 650. So even while the consolidation happens at the top, right, the cost of entry is not great, and there's a lot of people are hanging a shingle and trying to build a fund administrator out there, and the way they try to compete against the big mammoth firms are, hey, you don't want to pay those prices, and and you're going to get an A team, not a C team if you're small, right? And but so let's talk about the competitive landscape and product specifically. And you make the point you've gone from single product to multi-product. If for our listeners, if you had to differentiate Waystone a bit through product, right? What would how would you highlight that, Sanjeev?
Yeah. So look, maybe what I do, George, if okay, I mean, I'll briefly touch upon the three products and then share with you how we differentiate, right?
Yeah,
So
perfect.
look, in size from the largest downwards, our largest business or product is what we now call regulated funds solutions, which is really an extension of what we started off as a fund governance type of a business. We have grown to, in addition to being that Cayman entity which provides fund governance and directorships, to also being now the largest third party management company in Europe. We've grown basically from a little over 20 billion of assets 4 years ago to just over 400 billion now.
No.
We operate in all the large European domiciles. We are number one player in Ireland from a third party perspective, and number one similarly by AUM third party in the UK. And we were the fastest growing Luxembourg administrator in the top five. Not administrator, sorry, management company
Yeah.
in the course of the last 12 months, right? And this is an extremely fast growing business despite our size because it's a nascent outsourced industry. I mean, you still have, somewhere between 10 to 15% of the business overall outsourced. So, there's a huge opportunity as more asset managers look at what they want to do to their operating model and maybe leverage someone like us, when they're looking at newer products like alternatives or just looking at their operating model, right? So that's business number one or product number one. Product number two is what we call administration solutions, which is essentially providing fund accounting, fund administration, transfer agency to traditional and alternatives. Again, it's our newest business. So we were zero in terms of assets under administration a few years ago. We're at around 260 billion across the three businesses, admin, accounting, and transfer agency. Our biggest investment has been on the alternative side, which is actually our fastest growing area. I mean, our client base is largely the large to mid-sized managers, and the mid-sized managers, I think, find a good solution in us in being the right balance of bespoke, but still leveraging, the right core capabilities, which is essential. We have built our capabilities organically and inorganically to cover pretty much all the alternative asset classes. So we cover private credit and private debt, which is the fastest growing part of the market. And we also cover private equity and hedge, which may not be growing as quickly, but is a huge wallet. And a big opportunity for us to win versus our competitors. Our last acquisition of Link Fund Solutions also gave us real estate capabilities, right? So we pretty much cover it all. So that's business number two. Business number three is compliance solutions. Interestingly, George, I mean, we were either the first or one of the first asset servicing firms who service the funds to take the leap and start looking at compliance solutions for the fund manager.
Yes.
Right. And obviously a number of people have now done that as well. Very, very, very nice business. I mean, very complementary from a cross-sell perspective to the first two in providing compliance solutions, cyber help, CCO, CFO type of capabilities in the US markets, etc., to the fund managers. And why it's so complementary is also that very different from the first two businesses, which are very platform heavy. This is much more of selling people skills, so relatively quick to win deals and monetize from a revenue perspective, versus, say, an administration deal, which takes a few months to sell and a few more funds a month to implement, right? So that's our third business, right? So that's basically, I think, how we look at the business. You asked me as to how we differentiate, right? And I mean, in a single sentence, I mean, the differentiation is by putting the client at the heart or at the center of everything we do. And I've been in the industry long enough.
Right.
I mean, many asset servicing firms, start looking a little inwards and forget that at the end of the day we're providing solutions to our client base. So that's how we differentiate. If I double click on it, a few things come to mind, right? I mean, I think we like to believe that we are a strategic partner to our clients and not only providing them day-to-day service. I think just doing that brings us to the table, but we are at the heart of deciding and defining their product with them, their distribution approach with them, etc. So really being their eyes and ears on the ground where we service them. We believe that we differentiate by being global, and our growth to 27 domiciles is at the heart of it. And by global, I mean, it's not just having presence in a new market, it's being able to provide seamless, consistent solutions which look and feel the same across all the domiciles. So I think that's how we look at differentiating as well. And I think, another important way is being agile to market change, right? I mean, the industry is moving very quickly. Just this morning, we announced that we were the first European manco to basically support a CLOE.
Yeah, I actually saw that on LinkedIn.
Yeah. So I mean, that's agility, right? Being there right in front in terms of helping our clients do new things. We were also the first third-party ACD or management company in the UK to get approval to service the LTAF, which is a very fast-growing capability, right? So I think we believe we differentiate in that way as well. And then lastly, look, I mean, I think you'll hear us speak a lot about it. Technology is a huge facilitator in our industry. And I think in terms of not only becoming more agile, more cost effective, but also being able to return data more effectively to our clients is how we want to differentiate as well.
Yeah.
Right? So hopefully it puts into perspective. Long answer to your question.
That's a great story. And I will tell you, we see them all, as you know, probably most of the top 50 work with us in some form or fashion that you compete with. But a couple things jump out at me. The 27 jurisdictions, I think, is impressive, especially, one of the problems we see, especially with some of the, let's say, European-centric firms, is that whole integration doesn't happen or doesn't happen well, right? So the client experience is maybe not as seamless as you would the salesperson would tell you it is, right? And
Correct.
The other is the compliance, and I always thought that was a brilliant move. We have for the longest time thought that firms like you should be bringing compliance, and there's only when you think about when you think about the U.S. compliance world, it's maybe a firm like ACA, which is kind of a monster onto itself, and then a bunch of very small compliance shops, right? 20 people, 25 people, and there's tons of them. I think bringing it to the client along with the other services is really smart, and we've even seen, and I won't mention names, a couple firms that are kind of trying to copycat that as their entree into the U.S. Right? Is I'm not going to buy.
You're right.
I'm not going to buy a fund administrator, but I'm going to go buy a third-party compliance firm. Right? So
look, I mean, you're spot on. I mean, I think so. Just share, right? It has been our fastest growing business this year. And you talk about the US market, which is very, very attractive and growing. But I mean, we've seen a lot of success in the UAE, where, a lot of managers are looking at that domicile, and we've been there and we are providing a lot of support from a compliance perspective. Likewise in Singapore. Again, I think, there's a lot of activity, and, we've actually done pretty well there as well. So very, very,
having that
very,
reach is a great differentiator. So let's get into 24, and it's hard to believe it's September 4th, right? But what I wanted you to comment on a little bit as this year's coming to close, kind of what was your 24 agenda? Like you've been here through 24, right? And I think you and I speaking, there are a few pillars of activity that I would like you to kind of summarize and talk to, and then kind of we'll finish up with kind of headwinds and tailwinds and kind of 25 as I'm sure that planning is going to start soon. But if you kind of had to talk about 24, kind of what would you say the effort and highlights and areas of concentration have been?
Yeah, look, I mean, I joined only in December, right? So obviously the getting into 24, I mean, personally, it was a lot about getting to know the company better. And frankly, starting off by defining a 3 to 4 year vision of where we could take the company and putting the plan, which is milestone driven, measurable, in terms of getting there, so that you can align the whole organization behind it, right? So that was, I think, at the start of it, in terms of understanding the company, making sure that we put the stake in the ground of where we want to take the organization, and getting the buy-in of the team on that, right, in a measurable plan. Now, once that was done, I think there have been a few pillars, as you mentioned, which have been a focus for us as we work towards that plan. Right, it's all linked to getting to that plan. Right, number one was to ensure that we have a single brand identity, Waystone. I mean, and not operate as individual companies which are part of a group. I think it was important for us to, for our clients, for the market and the industry, as well as for ourselves, have a single brand image. And towards that, a lot of activities happened in the course of this year. I mean, by October end, all our legal entities would have been rebranded accordingly and optimized. We would have moved into common core corporate infrastructure, like a single finance tool, a single HR tool, etc., as against having multiple of them. We've also reset our organization construct to be run across these three businesses and geography, which provides us much more accountability in terms of having that global vision, but executing locally and in an agile manner. So that's also done, right? And most importantly, by end of October, we would have completed the integration of our largest acquisition, Link Fund Solutions, which was 700 of our 1,700 people, and it would all have moved on to our own corporate infrastructure, right? So we've completely aligned into a single brand, a single identity, externally as well as operationally. The second pillar was, to further enhance what was already a very strong growth across the businesses. And there were a few tweaks which have helped us immensely. On the organic growth level, just setting this org construct as three businesses has allowed us to cross-sell immensely, rather than operate as different organizations. Our cross-sell levels are up 50% over last year, just by making the change and operating as a single organization, in terms of being able to sell to our clients new domiciles or new products. So I think very important. And then, given the fact that we look at the business more holistically, we have been able to work with much larger clients who actually see us as a much more compelling proposition.
Yes. Yeah.
On the inorganic side, George, I mean, that 3 to 4 year plan has identified, pockets where we need either scale, capability, or geography. And we are marching down the path in terms of completing that from an inorganic perspective. Third pillar, look, a high performance culture. I mean, raise the bar in terms of getting the best people, rewarding outperformance. I think extremely important. And linked to that is basically delivering client excellence, right? I mean, I think we already talked about how we differentiate, and keeping our existing clients happy, extremely important. They are the best source for new business and the best references for new names, right? So I think those are the four pillars I think we've been focused on and done quite well as we entered the fourth quarter.
Yeah, I mean, you make me think of I like those pillars, and kind of the client excellence actually, obviously equates to organic, growth, right? You'd be surprised that we do a lot of competitive assessment work for the fund administration parts of firms, and you would be the senior people, our jaws would drop when we show them how many funds some of their clients have launched that they awarded to someone else, right? And in some cases they never even knew about it. So I agree with that. We talk, every market has kind of headwinds and tailwinds, right? And if you had to summarize 24, Sanjiv, what would you say, in either order, Matt, it doesn't matter to me, but, where were the headwinds, and where did you feel that some of the tailwinds were in, say, your first 9 months here?
Look, I mean, we've all been in this industry long, right? Look, I'm a firm believer that the headwinds and tailwinds are two sides of the same coin, right? A winning organization, a winning team is one which can take those headwinds in the industry and convert it into tailwinds for its own business, right? I think that's the way to look at it. So if you look at the headwinds, which we face similar to all our competitors and our clients. I mean, I think, look, the financial markets are extremely important for us. I mean, a lot of the fees, etc., which we earn are asset based. So any uncertainty there is a potential headwind, right? Yeah. And then we are in an environment where there is political and geopolitical challenges, right? A lot of elections underway or have happened, some still to happen. There are unfortunate wars happening in certain parts of the world. So, the markets being uncertain is definitely, something to address. The second thing is, I think, look, whilst for all the right reasons, a lot more regulation coming in, there is a short-term cost headwind in terms of being able to be ready for it, especially as you operate across different domiciles, right? And our clients face it, we face it. So I think what we have done well is to prepare and be ready for these type of headwinds and convert them into tailwinds. So I'll give you some examples, right? That cost pressure of being ready from a regulatory perspective, is on our clients as well. And I think as they look at expanding their business, we are there for them to outsource whatever they believe is not core to them in terms of them making the investment decision, and then whether it's their governance or their administration or their compliance, we are ready to do that, having basically on a more scaled basis got ready for that regulatory overlap, right, as against each one of them having to do themselves. So I think we've done a good job on that, and we're seeing outsourcing as a result of that benefiting our business. Secondly, right, look, I talked about the importance of alternatives to our strategy, both on the regulated, the RFS, the funds, as well as the administration side. We've seen that in current market condition, alternative products are outperforming the traditional products, right? And frankly, there's a blur between who used to be a traditional or an alternative manager.
That's right.
When we started working, you had a traditional manager and a hedge fund and a private equity. It's all merging together, right? And our investment in alternatives is actually starting to bear fruit in a significant way, right? So, in these market conditions, the alternatives, coming. So we've kind of converted into a tailwind. The third one, which comes to mind, goes to, what we just talked about earlier as well. The investors are starting to look at the costs of their products, and ETFs have started flourishing, and we had invested upfront in ETF as a capability, and therefore are really seeing the benefits of we've converted that into tailwinds for our business. And there's a lot of ETFs being launched in Europe, largely in Ireland, and we are at the heart of a lot of that new activity. So I think that's really, if I look at 2024, the trick has been and will continue to be that if we could preempt those headwinds, convert them into tailwinds for your business. That's the winning team. That's the winning business.
No, that's right. And I think you mentioned too that I think are very important. One is just the growth projections for alternatives, and especially with the whole democratization of alternatives, right? Now that moving to the retail, the average person may now be buying alternative funds in their 401k, right, or their IRA, and that presents.
Who would have thought of that many years ago?
That presents just a whole new landscape of opportunity. And then I think the compliance, back to, I think that being somewhat brilliant, because I'll speak just to the SEC agenda. I don't think we've seen in the last 18 months a bigger regulatory agenda come out of the SEC, right? Some, we're, moving, and some stuff not, like the private, fund rule, for example, right? But the agenda itself is massive, and I think, to your point, if people can feel that you're just a very natural extension of what they're doing, right? And that it goes a long way. So then let's finish up with just 25, right? Not far away, even though there's 4 months left. I don't know about you, but I've got 3 or 4 planning sessions in September already, right? Scheduled.
We are already there. We are already budgeting for next year. Absolutely are.
Yep. So what's when you look out, just kind of in summary, what are some of the areas that you might touch on that we haven't today, or maybe reemphasize?
Look, so we've already set our 3 to 4 year plan, right? So we know what we want to do in 25. That's already part of what we had set up before. And the fact that we've delivered on 24 puts us in a good stage for 25, right? I also feel that, given the fact that a lot of the integration activity, which I spoke about already, will be done in 2024, it will allow us to focus completely onto growth, right? I see further focus on our growth agenda. I do believe that there will be continued consolidation in our industries, and there will also be more outsourcing, given all the pressures and the headwinds we spoke about, right? So we're there to, we believe, leverage both of those trends in the industry, whether it's consolidation, whether it is basically more outsourcing, which our clients want to do as they look at their operating model. I will also look to complete the gaps which I have in my product scale geography, which I spoke about, again driven by our direction of business, where organic growth may not be sufficient. We look at filling it inorganically, right? So that will become again a much higher priority, given a lot of the integrations done, and we have a core set of platforms to bring new business on if we need to, right? And I think lastly, you'll hear us share a lot more and speak a lot more on how we're leveraging newer technologies which are available to us to find solutions internally for ourselves, and therefore become more optimal and agile, cost effective for our clients. And at the same time, produce better quality data and output to our clients. And we have initiated a lot of work on that front, but it'll start bearing fruit as we get into
and that's really important because take compliance historically has been a very heavy body shops, right? And there's a lot of technology that can change that today, right? As a perfect example. So
correct. I mean, that's across the businesses, right? I mean, the pace of change in our industry outpaces the change pace of our platforms. But there are now newer technologies which can help you bridge that gap very, very effectively. And that's what we're all talking about. But I think it's also in how do you use these new technologies to mine the data we all sit on, especially given the scale we have now grown into more meaningful outputs for our clients to help them with their business decisions. So it's really
it sounds like you should be at one of our meetings. That's what we talk about.
That's what we talk about. Exactly.
Is data being actionable, right? And getting people out of the mining business. So listen, I want to thank you. You've been a terrific guest, and really enjoyed getting to hear your view. And I think you're off to a fantastic start, right? You probably feel like you've been there longer than 9 months, but
that's true.
But
that's very true.
I want to thank you too. Waystone, the Centaur, have been great, long-standing clients of Convergence. We've always had a nice relationship. So thank you for joining me, and I really enjoyed our conversation today.
Thank you, George, again for having me. Again, a great conversation. Thank you again.
All right, thank you.